You're listening to the Business Wealth Impact Podcast, your source for empowering information and cutting-edge ideas from the world's top minds. I'm your host, Jeanne Amlour, founder of seven-figure coaching company, Jeanne Amlour International. Join me on a journey to unleash your potential and create your highest success. Welcome to Business Wealth Impact. Hello and welcome to another exciting adventure with Business Wealth Impact. Today we have Todd Polke, who's an international educator and trainer in investing and wealth creation. Gotta love that one. In addition to the 20 years of experience as a professional investor, he has worked with thousands of investors to grow and scale their personal wealth, helping them to create more freedom, choices, and sovereignty for themselves and their families. Todd has been a regular guest on Sky News and Your Money as a property investment commentator. His trainings focus on building high-performance portfolios systems. So welcome, Todd.
Thank you so much. Really appreciate it. Great to be here.
And great to have another sort of fellow Aussie on board. You know, I grew up in Australia in Perth, so I'm kind of half Australian American.
Perth is a long way away. Yeah, it's a long way away.
Yeah, a long way away. So tell me, I want to hear, what are these wonderful wealth systems? Because you talk a lot about like not just an investment here or there. You're talking about a whole systemic, that's weird, systemic system, but a systemic process or a system. What is this that you're doing that's different to all the other people there that are helping people invest?
Right. Such a good question. One of the things that I see with a lot of investors, after doing this for 20 years, I've literally, any type of investor you meet, I've met them, from people that are just starting to the people that have, 100 million in personal portfolios and such. But here's one of the things that I find that a lot of people get stuck in is that they get kind of, they have their blinkers on when it comes to the world of investing, right? Where, some coaches or some people might go, oh no, property, that's the only way to do things. And others go, shares, it's the only way to do things. And some people go, crypto, that's it. And business, that's it. And personally, I think that's all absolute and utter garbage. I think that every asset class can serve the right purpose in a portfolio if it's has the right purpose and if it's in the right place. Because when I think about it, we're running a wealth system. Like in a system, there's individual cogs and elements that all have to be in the right place, that when it's all actually put together, there's this beautifully well-oiled machine, which winds up creating, in the end, for our outcome, is cash flow to fund a lifestyle you desire. But I find a lot of people, because they miss the different individual elements of that system, they wind up getting themselves stuck, or they wind up being their own bottleneck to success. And it's a really, really common thing, and I see literally all the time.
Okay, so some of the common problems are that I've come across for myself, because I've sort of in the last 3 years become, I think, a bit of a better investor. I've done a bit more diversity, but then some people say don't, all that. But I find one of the problems is people keep too much cash. Okay.
Yep. Cash is trash. I completely agree with that. Yep.
Right. You have to have some though, or they have no cash at all, and they're and it's all in long-term risky investments. Okay. I kind of fall a little bit into that category. Okay. And they don't have enough very low risk, maybe 3 to 5%, like, putting it in some, over here, we can put it in a bank account and it can get you 4%. And actually one of the bank accounts is not a CD. You can take it out whenever you want. So they're doing that, or they're over leveraging debt. Like they'll do the whole BRRRR thing. They'll buy, because they're told by the real estate gurus, they're left wide open in case there is a downturn, by the way, that they got a BRRRR. So that, you buy something and then you pull that out and you get another, and you're very over leveraged if something happens in the real estate market, and you could lose it all. So, those are some of the problems I've seen. Also, one of the issues is no cash flow. I'm working on getting cash flow going. And of course, real estate with rentals is kind of probably the most popular one to do with that. So what's your system? How much do you diversify? What is your system that is different from all of this and that combats these common problems? And what are some other problems that you know about?
Perfect. So let's take a step back from, whether we do property or shares or anything like that, because to me, that's like the tip of the iceberg conversation, right? The real majesty which comes in from building a portfolio is everything, beneath the surface. And this is where we talk about Strategy is where we talk about structure. It's where we talk about having the right wealth vehicles kind of set up.
Mm.
It's where we talk about making sure we've got a personal finance system so that every dollar that comes into your life has a plan, has a purpose. We don't have
Mm.
evaporating money in our life, and
Mhm.
it's having our buffers in place. And so there's all these different elements that sit beneath the surface, which have to
Mhm.
be in place because it's kind of like that deep and strong foundation that we can then put 2 feet on top of to be able to
Mhm.
stand on top of as we go forward and start growing assets to build a portfolio. Now,
Mhm.
at the very beginning of all this comes down to strategy, because when you don't have a strategy, when you don't have a plan, you're just wandering around in the dark and you're hoping for the best. And that's just gambling
Mhm.
in my eyes. And investors don't
Mhm.
gamble. So, but one of the big things that a lot of people do is that all they're thinking about is, well, what property should I buy? Or what share should
Mm.
I buy? Or maybe
Mhm.
what bit of crypto should I pick up?
Mhm.
And that's kind of the start and the finish of the conversation, where
Mhm.
what we really need to rewind and start to understand first is, okay, number one, what does financial freedom mean to me? Because that's
Mm.
the end goal for everybody, to
Right.
financial freedom. And to me, when I think about building a portfolio, I'm thinking about building a portfolio of quality assets diversified over different types and structures
Mhm.
and locations, which we
Mhm.
ultimately own outright to create a consistent, reliable income stream to fund the lifestyle you desire.
Mhm.
So when we build a portfolio, that's what the outcome is.
Mhm.
And so we've got to understand, well, what does financial freedom mean to me? What's the how much is that financial freedom going to cost? And how do I want to be earning that income? Because when we can start to understand that, we can then reverse engineer that back to where we are right now and go,
Mhm.
well, let's actually start to craft a plan and a strategy that's
Mhm.
going to help us to move towards that point. So step
Mhm.
one is all about strategy, because without that, you're just gambling and you're trying to throw a little bit of paint on the wall and a bit of
Okay,
paint on the wall here and
let
hope
me
for.
interject. What
No.
now, let's stop at each point. What is that strategy? You said a strategy. What's the strategy?
Yeah. So in every investor situation, there are three core asset types which have to be in play. Okay.
Mhm.
And the first one is what I call the buy and gold strategy. So these are the better quality assets in better locations and that tend to outperform the marketplace in terms of capital growth, because that's where we
Mhm.
create a real wealth from an investing in general, is the growth in the value of the asset. And so
Mhm.
we have these assets in place to grow in value for us.
Mhm.
Now, that's great, but they can also come with some challenges because there's better assets, they can be more expensive, but also their yields and their cash flow may not be as high because they
Mhm.
are better assets, especially when
Right.
we're talking about real estate.
Mhm.
Second element is we need what I call the paycheck strategy. So, where the primary purpose behind our buying gold strategy is around capital growth, the
Mhm.
primary purpose behind our paycheck strategy is all around creating cash flow. And
Mhm.
as we know, where most people get this from in their life is just from their job or it's from their business,
Yes.
and that's it.
Yes.
And if you base the health of your portfolio and your life only on that one income stream, it's always going to be a limiting factor to your lifestyle,
Mhm.
to your portfolio strength, to your growth. And it's
Mhm.
just you become the bottleneck to your own success. So we need to
Right.
add some cash flow elements in the portfolio.
Mhm.
And then the third is what I call the momentum strategies. And these are the elements that we're not going to hold forever and a day, but their whole purpose, we get them, we get a result, we trade them back to the marketplace to turn over big chunks of capital to
Mhm.
either eliminate debt that we might be
Mhm.
holding
Mhm.
or to go and build up our capital base in some of these other strategies, continue growing
Mm.
our overarching system.
Okay, so an example of the third one would be like a private equity investment that you're maybe a note, you're going to get a percentage, you get the warrants, they cash out or sell the company and you get your money back and then you reinvest. That's like the third one, right?
Right. Or it
Right.
could be rehabs on property. Or it could be trading cryptocurrency. It
Right.
really doesn't matter what it is. We're getting it, we're trading it back to turn over capital.
Okay. So, what are some of your I'm going to get to the nitty-gritty here because I
Yeah,
love
do it. Yeah,
investing.
let's go.
Okay. What are some of your cash flow ideas, okay, that I guess you're pretty heavy on real estate, right? Because I mean, the typical easiest cash flow thing is to buy a place and rent it out, right?
Sure.
So, what are your cash flow ideas?
Sure. And so what's always fascinating to me is different markets that offer different opportunities, right?
Mhm.
And so when we look at real estate in Australia, that real estate offering rental, the yields are really quite low, like, and you'll
Mm.
wind up
Mhm.
bleeding money. They're often very negatively geared in
Right.
different areas and different things. And it's always interesting to understand. To me, where I build cash flow strategies in is actually primarily from business, right? Although I
Mhm,
store a lot of my wealth in real estate, I make
mhm,
most of my wealth in equities
mm,
and business investments nowadays. But I also do a lot of alternate strategies. So we do a lot of lending strategies to developers and to business owners where we can go and do 15 to 20% returns with security. Off market loan notes doing 16 to 35% style
mm,
returns, and there's so many different opportunities out there, which is really quite incredible. So to me, businesses and then lending strategies to property developers are probably two of my biggest ones. And then, focusing a lot of these alternate strategies like some loan notes and like, owning, different parts of different cash flowing businesses and
mhm,
such as developing the cash flow
mm.
streams.
Okay, so we have to really know how to evaluate companies to do some of those plays, right? Because not everybody can properly evaluate companies. That's a hard thing to get that experience. So you're talking about hard money lending when you say off market, like notes for 35%, right?
Yeah, correct. I am. Yeah, 100%. Yeah,
So there's some, and I feel like a lot of people really when we talk about, and you're talking about globally, you're talking about not just Australia, right?
definitely globally. Yeah.
Right. Okay. Because, now they say if you get 8 or 10% for hard money lending for real estate or something, that's good. You're saying there are 35%
Yeah,
low? Wow.
100% there are.
Okay. It's hard to find those.
Well, I understand why a lot of people would say that.
Yeah.
But like it's also about knowing where to look and having the
Yes.
right network in place to be able to
Hmm.
tap into.
Hmm.
One of the things which I see for a lot of people is that they're conditioned to expect low returns. You're talking about
Yes.
3%, 5% returns
Mm.
before. And to me, we're talking about cash and such. And yes, we've got to have some cash in place. There's some buffers, there's some
Hmm.
emergency
Sure.
funds for some
Yeah.
liquidity. But if we have too much in there, if our money is not keeping up with inflation right now, we're literally going backwards.
You're
And as we
losing.
know, we're in a very high
Right.
inflationary environment at this point in time.
Hmm.
And what I find is a lot of people conditioned to expect these low returns. And anytime we go to returns of 8% or 10% or
Hmm.
15%, people will sit there and automatically go, well, if it sounds too good to be true, then it must be in it because it's a higher return, it means higher
Yes.
risk,
Yes.
right?
No, it's funny. I never thought that. And people are like, oh, I got this investment. It's 10%. I'm like, is that all? Because for the risk that
That's right.
represents, I always said, then they said, oh, you don't know about investing. I said, I know that the risk that represents for only 10%, I would never do that. But then they try to brainwash you that that is good. Because I don't believe that's good, I have found better investments way higher, which, because track record and all sorts of things. So, okay. So basically, part of this is networking and not believing what everybody says because it's the mindset of you're going to be in the higher level of people that are in the know, correct?
Right.
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 Yes.
Because if you think about how we're conditioned in life, it's, that whole go to school and study hard and get a
Mhm.
safe, secure job and become a good boy and girl to do what they're told and pay their
Right.
taxes. And that's
Mhm.
how we're conditioned to follow the rules of life.
Right.
The governments don't want crazy, financially free people running around with all these
No.
resources and freedom and time and opportunity to be able to
Absolutely
go
not.
and think for themselves.
Yeah.
That's crazy thinking,
Right.
right?
Exactly.
But they want functioning, continental realist society, right?
Mhm. They don't want people like us. Come on. They need a few of us. So,
No.
do you also there's this, strategy that an Australian wrote about, and he was, like, sued because he was telling Australians how to buy real estate with no money down, even internationally, and the Australians didn't like that, the government. Do you know that also that strategy of how to buy property internationally with no money down?
Well, there are a few different ways to do that for sure. I don't know which case you were talking about. It wouldn't
Mm.
surprise me that someone would get
Mhm.
in trouble for teaching something like that,
Yeah.
especially in Australia.
Mhm.
Pretty small type of thinking that can happen in this country over here. There's no doubt about it.
Yes.
But like doing property options and private equity deals for real estate is not an abnormal strategy. It's definitely
Mm.
doable. It's just takes some creative thinking and a
Right.
drive to go and network and you got to be able to hustle to get that stuff done.
Find it. Yeah. Yeah. Okay. So, do you believe in the Ray Dalio thing that I think he says we have to have something like, is it 15 non correlated investments? What do you feel about that philosophy?
Interesting. And so when you were talking about non-correlated investments, so we're really talking about the idea of diversification, right? Where different things in different markets and different types and different
Hmm.
industries and things like that. Look, I personally don't believe in diversification for diversity's sake. I think
Mm,
that's there's I'm trying to be polite here, but there's a little bit of ignorance associated to that, right? And we
Mm,
see this with a lot of big managed funds and
mhm,
superannuation and 401ks where they
mhm,
have to diversify just
mhm,
for the sake of diversifying, not because it's
mm,
a good deal. But then we
mm,
look at like Warren Buffett, who doesn't believe in diversification, and he
right.
will sit on
Oh, yeah.
billions in cash until he finds one great value based deal and then just kind of puts all his money into it.
Mm,
So I don't believe in diversifying for diversity's sake. What I believe is in that every element has to serve a purpose, and
mm,
you want to create some diversity. There's no doubt
mhm,
about it, but not for the sake of it. So
mm,
I don't think there's a specific number. I think, well, what's based on your situation that you want to create that's going to fund the lifestyle you desire, and
mm,
what elements do we need to bring into the portfolio that's going to create a fundamental difference to your cash flow and your capital
mm.
allocations?
Well, obviously it's for, risk management because if, say, you have everything in real estate and then real estate takes a downturn, then you're going to
Sure,
lose everything. And it is
sure,
very
100%.
hard. It's very hard to find actual non-correlation I've found because, now they're realizing that crypto is not actually completely not correlated to stocks and bonds because when Wall Street moves, so does the crypto. So that's not
Yeah.
completely non-correlated anymore, I don't believe, right? So I think it's hard to find actual true non-correlation, like really, unless it's gold. Well, that is non-correlated to stocks and bonds. That's for sure, right?
But it's correlated to other elements though, like, so
It is.
yeah,
So my thing was okay. I guess there has to be some diversity, so you don't have all your eggs. Nobody should have all their eggs in one basket. I think we all agree with that.
absolutely.
Okay, so what you said about Warren, Warren doesn't think cash is trash. He thinks that cash is there, ready for him to use when he's ready to dump it somewhere else, right?
Right, because it's an opportunity fund,
Yes,
right? And
yes.
he's waiting for value in the market, and if he
Mm,
doesn't find value, then he doesn't just go shove it somewhere for the sake of putting it somewhere.
right.
So
Yes.
it always has to have that purpose.
Right. Now you were saying that you're not like a huge fan of stocks, you said before. Tell me more about that.
I used to trade a lot of options in the market and a lot of
Mm,
shares and different elements. And I'm going to be careful not to dive down rabbit holes
mhm,
when I start talking about this, because I could be here a while. Like when I start thinking about the share market and the stock market, I'm not heavily in the market at this point in time because I do
mhm,
feel that it's quite high in the
mm,
marketplace, and I think that we are more inclined to have a bit of a crash in the share
mhm,
market, given what's going on in the overall in the world and the economy and
mhm.
such right now. But I also know that there's a lot of manipulation associated
Yes.
with share markets and economies and such. And from even from an energetic level, I don't like participating in that. If that makes sense,
Mm,
I
mm,
prefer to, call me a control freak, but I feel that as individuals, especially with what I see coming with the central bank digital currencies and the
mhm,
control
yes.
mechanisms that are being put on us,
Mhm,
we need to make sure that we have absolute sovereignty. So when we talk
mm,
about, you're talking about Ray Dalio and these
mhm,
different, the diversity and such, we need to make sure that we have diversity of assets, so we have choices and we have control over our future. And
mhm,
anyone that's got everything tied up in shares and equities or
mhm,
401ks or super, I see a huge level of risk associated to that. So I'm not a
mm.
fan of things that can be manipulated in a big, big way. Yeah,
Yeah.
I'm not a fan of it.
No, I totally hear you, and the whole thing about sovereignty, that interested me as well. So, I agree with you. So, how does one do that? One does private equity plays, some gold, you think? A bit of cash as a
Right.
buffer, and then real estate? Is that kind of where you suggest people put their money generally?
Right. Right. So now here's how I think about sovereignty and how I think about diversification, right?
Mhm,
I actually think there's five different types of diversification that we need within our portfolio.
mhm,
The first type is the asset class, and that's
mhm,
the things you're talking about, right?
mhm,
Having some hard assets, things like real estate and
mm,
property, I think is core in a portfolio. And
mhm,
I store a lot of my wealth in real estate, right?
mhm.
But around the world, because I don't
Yes.
like having everything in one
Ah,
jurisdiction in one location, right? So
okay.
again, diversification. Um,
Mhm,
but like property is becoming so unaffordable in so many areas.
mm.
I've got a 13-year-old daughter and I've got a 1-year-old son. And I
Aw,
sit there and I think about, my goodness, even my 13-year-old, what's it going to be like for her to buy a home in the next 7 years or 10 years or something
right.
like that? And it's just not going to be possible in Australia. It's just not going to, like it is in
Yeah.
a lot of other places in the world.
Mhm.
Now she's going to be fine. We've been building portfolios for a
Yes.
while, but like that generation is a problem. And so,
Yeah.
like, I think property is going to be a big part of a wealth divide in the world. So, one
Mm.
is asset classes. So, real estate, having some in gold as a good
Mhm.
buffer and a good hedge
Mhm.
against the market. Cryptocurrency is a
Mhm.
digital, part of the digital currency of the future. And then some private equity stuff, I think, is a great fundamental
Mhm.
mix within a portfolio. So the second element of diversification is geographical diversification. So
Mhm.
this is where we have some different wealth pockets set up in different areas in the world. So it's not all just under one jurisdiction or one
Mhm.
set of tax officers, watchful eyes, or
Mm.
one location and one set of rules. So a big believer in that.
Mhm.
Time horizon is number three. So it's not like you have different asset classes coming out of a different liquidity points, some
Yes.
long-term assets, some short-term, some
Mhm.
medium-term ones. Risk is number four. So the different risk profiles, diversification in the profile of the asset class itself and the
Mhm.
provider. And then finally, number five is all about the strategy, which is the three strategies I was talking about before. So
Mm.
when we think about financial sovereignty, what we're really talking about is how can you set yourself up that no matter
Mhm.
what happens in the world, if there's another
Mm.
GSP, another lockdowns, this
Mm.
happens, wars, whatever happens, that and your family are safe and in control and you can
Right.
navigate situations. And
Mhm.
so that's why we have to have diversification around those different elements, which is all fundamentally around you having control no matter what happens, what comes your way.
That's beautiful. So you own property in other parts of the world. So if there were a lockdown, you could go to your other property where maybe there's not a lockdown or where you're a little more free.
Exactly.
I'm interested, how many different countries do you own property in?
Four countries now.
Okay, so it's Australia, America, and 2 other countries?
Not in the US. Don't have any in the
Oh,
US at this point in time. No, got it in
okay.
Australia, got it in New Zealand, got it in
Mhm.
Singapore,
Uh-huh.
and we're just about to accumulate another one in Dubai. We were just talking about, and we're
Yes.
also looking at another market over in another market as well. We're just kind of figuring that way out
Awesome.
somewhere in Europe.
Awesome, awesome. Okay. So that's interesting. You talked about the 5 strategies, was that it?
Five types of diversification
5
is what I was talking about.
diversification and then 3 points that are strategy, and what was the other one?
So I've spoken about a lot. There's a lot I can talk about actually.
Yeah, there were
Um,
5 and 3, so 5
yeah, and
diversification,
the three
right?
asset types is the
3
buying gold, the paycheck, momentum, where it's
Mhm.
all about the
Yes,
purpose of the elements,
yes.
and then
Mhm.
it's about the five different types of diversification.
Yes.
Right, is what we've been talking
Okay.
about so far.
Okay, awesome. So how long have you been at this, and what has changed in your life when you started using your system on yourself?
Yeah, great question. So I'm in about year number 22 as of investing,
Mm.
right? Is what I've been doing.
Mhm.
I had the outrageous privilege of burning myself out at about the age of 19, which shocked me out of my old personal training, working 17 hours a day, 6 days a week, 50 weeks of the year, just work hard to
Mm.
create success type of mindset I had in. And I got involved in the world of investing. In my very first deal, I made more money in that one property deal than my entire year as a personal trainer. And I just learned this beautiful word
Mm.
called leverage, and I fell in love with the world of investing. But and I got that first property and went into my next one after that. But what I learned was that I wound up building a house of cards, and
Mm.
all my everything was looking beautiful from the outside. The portfolio looked great, and I was making money and doing this. And all it took was for the economic winds to blow in the opposite direction, and I lost everything and had to start all over again.
Oh.
By about my mid-20s, which is a fun and humbling experience. So, um,
Mhm. So you lost everything because there was a downturn in the real estate market?
yeah, especially in real estate, because I was very heavy in real estate at that point in time.
Ah,
So the things I'm
okay.
talking about, diversification and buffers and having a
Mm.
system which is, strategy, structure, system is what I always think about, right?
Mhm.
Having a clear plan in place and structuring
Mhm.
yourself so you're safe while you're building your portfolio and setting a
Mm.
system up so your portfolio is taking care of itself and then money making more money. That's how I think about it, right?
Got it.
And
Yeah.
those elements, after losing everything and having to kind of take a really strong hard look at how I was building wealth, it changed my whole perspective and how I do everything now. And so
Oh,
now I'm very methodical rather than being random, and that's probably the biggest shift
yes.
that makes when you build a create a system. The same as what you do, right? You know how to help coaches build and scale kind of
Mhm.
6 and 7 figure
Yes.
businesses, and there's a system
Mhm.
for it. It's not luck. It's the same with money. It's not luck. It's just a system.
Right. Yeah, I think that we all have a system for something. We have
Right.
to apply systems to everything we're doing. But when we first start, we don't really have. I was throwing mud at walls with my investing, and now I'm sort of getting like, okay, it's gotten a lot better. So tell me a little bit. I guess you're also talking about the structures of like LLCs and corporations and trusts to have asset protection as well, right?
Yeah, correct.
Yeah.
Yeah, yeah.
Mm,
Because when we talk about structure, I think about three elements to do with structure, right? I think about one is how you get yourself market ready, and so what I
mm,
mean by that is that because if you're not market ready, then what happens is that a great deal pops up, but you're not ready to go and take advantage of the deal,
exactly.
and you have to wave goodbye to it time and
Hmm.
time again. And so we got
Hmm.
to get ourselves market ready, which is mind ready. So all the
Hmm.
psychology work we got to do, the
Hmm.
finance ready. So we've got our finance elements in place,
Hmm.
team ready, so we've got the right team to help us implement,
Hmm.
and then structure ready, which is do we have our LLC? Do we have our trust?
Hmm.
Are we working in the
Hmm.
private versus the public sector?
Hmm.
Do we have some onshore and offshore stuff that we're doing,
Mm,
we're working with, and how to install the right asset
mm,
into the right wealth vehicle that's serving that
exactly.
purpose, right?
Yes, that's complex. I'm getting that now. But when I first started, I thought, okay, I made a lot of money really quickly. And I thought, okay,
Nice.
I'm just not going to like, so I had a cash and I thought, okay, what do? I'm going to wait a bit and get my mind ready. And then I thought, you know what? I don't have all those structures. I'm going to not wait. I'm just going to invest and I'll pay more taxes on it. But it's better than not investing at all. However,
Yeah,
I lost 75K on my very first multifamily deal, which
got it.
was just bad luck. Like these really seasoned investors were in the same exact deal than me. They evaluated it for me. They said, we've made so much money, but it was right before the interest rates went up. I went
Sure.
into it. And so we just lost it recently after like 3 years in it. I'm like, oh my gosh, I spent 3 years to lose 75K. And I said, why did that happen? And one guy that was in the same deal, and he's made so many millions, he's been in 75 of these multifamily
Yeah.
deals. Okay.
Wow.
And he said, I've only ever lost on one. He goes, this is the second one. And this is the only one where I'm going to lose all my money. And I said, well, what happened? And he
Right.
laughed and he said, it was just bad luck, Sean.
Yeah.
He said, very bad luck for you. And he kind of laughed. He said, that's just really bad luck. That was your first one because this one looked really good. I was like,
Yeah.
was I an idiot? He goes, no, it was just bad luck. And I thought, oh my gosh, the very first one. So I didn't stop though. I thought, okay, that was bad luck. It just was. But
Good.
now, but there was a point where I was, and I agree, and I think it's good for people to hear this. You're not ready sometimes, and it's okay to say bye bye because
Yeah.
there'll always be another deal. And I think a lot of mistakes are made because people have a scarcity
Mm-hmm.
mentality. That
Mm-hmm.
there's always going to be another good deal, right?
Absolutely.
And I think that scarcity makes them not do their due diligence and they jump on stuff because somebody says, this is the best deal in the world. And I always say, that's okay. There'll be another good deal. And they're like, well, that's true, actually.
Yeah.
So do you find a lot of what are the biggest mistakes that investors make?
Yeah, so that psychology side of things, I think is as important as it is for the tactical stuff, like what am I going to buy, how am I going
Hmm.
to do, what am I going to do, right?
Hmm.
Is the way of
Hmm.
thinking that you have around money and wealth creation. I think it's just
Hmm.
as important. You've got to pigeon pair these two things together, and most people, unfortunately, have very dirty minds when it comes to money, just because we're not given a really
Hmm.
strong foundational background of it, and so emotions
Hmm.
creep in and as soon as you're making decisions based on emotion, you know you're not operating from a space of logic and a space of facts and
Hmm.
due diligence. And investors
Yeah.
make decisions based on, and you said something about making decisions before earlier, and that's a really
Hmm.
important element. A great investor is just a great financial decision maker. And we just
Hmm.
have to know how to make effective decisions and be able to run things through an effective framework. And so
Mm.
one of those big mistakes is that people get very emotional around things. And real estate's a perfect example of this. So because we feel
Hmm.
quite emotional about real estate, I see a lot of people, they walk into a property and they start going, oh, I love the kitchen. We have to live here. And some people go, I
Oh,
hate the
yeah.
bathroom. I can't do that. And I'm
Fix
not
it.
going to do it. I am going to do it just because I like it
Yes.
or not like it. I got to say to you, get
Hmm.
over it. It's got nothing to do with you, right? It's
Yeah.
just an investment vehicle.
Especially if you're not going to live there, right? No, the thing is, I'm not emotional. I just look at the numbers. I
Yeah,
ask other people that are investing, show me why you evaluated this. And that's why I don't, I think you have to get emotion right out of it. It has to be right out of the shop, like
right.
out. But even so, even if you make good decisions, you could still lose all your money because investment is risk.
Of course it is. And
Right.
what you said before about, you just go, well, that's bad luck, but then you got on
Hmm.
with it, right? And that's
Right.
this what's going to happen. If anyone that thinks that investing is just going to be rainbows and unicorns and skipping down the
Yeah.
rainbow path, like you're kidding yourself. Like, let's just cancel that completely
Yeah.
because shit's going to go
Yeah.
wrong. And you've got to know that when something goes wrong, you've got to sit there and go, well, okay, that sucks. What can I learn from it? I'm going to take
Yeah.
responsibility for where I am. And more importantly, I'm going
Mhm.
to take responsibility for what I'm going to go and do next. And if we come
Exactly.
from that level of psychology, then all of a sudden we're in control. And it's not just, we're out of control beings where all this external stuff is happening to us
Mm.
and we get all
Mhm.
victimized. It's just the market. There's
Mhm.
risk. And
And everything.
the biggest risk
We're
is doing
gambling.
nothing. That's the other thing. The biggest risk is not investing.
I agree, because we're losing money if we're not investing it just because of inflation.
Right.
It's worth so much
The
less.
hidden
But
taxes.
I
Yeah.
have become much more strict now,
Mm.
because what I have learned in the last 2 years, more and more, it is really you're betting on the pony. It's not just how great the idea and how great the company. More and more I'm realizing you're betting on the people that are
Mm.
running that investment. More and more I'm realizing that, because somebody's like, "This is a great investment." I look at it, I'm like, "It is an amazing, there was this amazing invention, and they're pretty far along." And I said, "Well, how come they're not being," and I thought, it's the CEO. Sure enough, the CEO is the inventor. And I said, "This is not a professional CEO. You
Right.
should have hired a CEO that had a track record of multi,
So true.
exits of,
Yep.
and that's the bottleneck." And I looked at it because it's amazing. And all these aviation companies want to buy this very specific thing. It's like incredible. And they are ready to build it. And I said, "What's wrong here?" I look at the deck and I said, "Okay, the deck looks," I said, there you have it. He's the inventor, but he
Mm.
didn't have the sense to say, "I'm an inventor and I need to get a professional CEO that people really respect, that has a track record, get him here." And then everybody has trust in that
Yeah.
CEO that has experience building a company, getting a good, exiting and making hundreds of millions of dollars for their investors, right?
Yeah. Yeah.
But that's where I've learned to not have emotion.
Yeah.
Like, I don't care how good it is. If that person has
So
not
true.
had a successful exit, I will not invest.
So true. And so you get all these mad scientists, right? I call them mad scientists. They're inventors and they
Right.
fall in love with their product and they fall in love with their
Yeah.
project. And we want them to do that because to invent something incredible, you just have to, like, this has got to be your world. You've got to love it. And
Mm,
absolutely. But that doesn't
right.
mean you're good at running a business. And in the end, when we're
Exactly.
investing, it's a business. And so we have to have
Mhm.
it's got to be a product that's a product market fit. But in the end, like we've got to invest in the people, right? And I'm so glad you said
Exactly.
that because
Exactly.
when I invest in private equity, I have 8
Mhm.
principles I go through when to even for something to
Ah.
pass my radar of
Mhm.
even getting to let's go deeper and
Mm.
get the data room and go deeper in the
Mhm.
things. It has to pass 8 principles. Number one
I love
is the
that.
founder. Number one.
Is that for me is now I've gotten it, because I lost that money, because the guy had a lot of deals, but if I had really dug deeper, I would have said, "Oh, you know what? I don't know, but oh, he's great." And I'm like, "Okay, I didn't know any better." Oh, I've made so much money with him. Now I'm like, "Okay, who do I know that knows that person?" Now it's like I had another deal presented. It looked amazing. A billionaire is involved in it. I met the founder, very young guy. I'm like,
Mhm.
"I love it." But this guy has never built a startup. I don't care who his mentor is. It's not the mentor running it. That mentor is a lot of other things he's doing, right? And if it's a billionaire mentor, probably not a big deal if he's this company, right? So you have to look at that as well. Even if it lost, the billionaire wouldn't really care that
Yeah.
much, it wouldn't make a dent. So I thought, and also the percentage wasn't that great, to be honest. The percentage for the note
Yeah.
was, I'm very picky now because I've gotten some amazing percentages. So
Awesome.
I'm guessing that's one of your principles, is also what is, if you're doing like, the credit loan note that Warren Buffett made billions of dollars with, that's a good vehicle, right? Where
Yeah.
you get warrants, right? I'm very picky now. So when somebody says it's 6%, I'm like, "Are you kidding me?"
I'm not getting out of bed for 6%. I'm not even vaguely
I don't
interested.
care how many. "Oh, but you get this in the shares." I'm like, "No, I'm stuck on the 6%. No, thank you, because
Mhm.
my money's gonna work harder, better." Well, you're amazing. The 8, we won't go through the 8 unless you wanna quickly go through your 8 just quickly.
I'll go through it quickly. I'm not very good at doing quick things, but I'm going to do it for you. Yeah. I'm a teacher at heart. I can't help myself. So, number one is team and founders. Okay. Very first principle. If it doesn't pass that, I'm just not interested. I'm done. That's it. I don't waste my time. I move on. The
Mhm.
next is all about the market. What problem does this business actually solve in the market? And is it actually a problem worth solving? That's number two.
Mhm.
Number 3 is alignment with trends. Is this product and business in alignment with market trends? And does the market growth support growing revenues and valuations? Number
Mhm.
4, is there a competitive advantage? And when I think of competitive
Mhm.
advantage, is it a technology advantage? Is it a brand awareness like Apple has a
Mhm.
brand advantage? Is it a
Mhm.
product differentiation? Is it a customer
Mhm.
delivery like Amazon has the customer delivery, or Costco has a
Mhm.
pricing is number 5, right? So it's got to have a competitive
Mhm.
advantage and the ability to be able to build and moat. Number 5 is a
Mhm.
rock solid business model. Is it real? And is it a scalable business model? And scalable is the emphasis here, because if we want to go towards exits, we have to be able to scale this business and scale the
Mhm.
asset. Number
Mhm.
6 is a clear pathway, roadmap to profitability, right? And so
Mhm.
especially depending on what level of business you're investing in, from angel investing to
Mhm.
established businesses, is a very different conversation. So we've
Mm.
got to be able to understand what's the roadmap to profitability of the business itself, if they are not profitable
Mhm.
yet, but also what's the roadmap to profitability of us as investors. And is that a
Mhm.
dividend? Is it a cash flow? Is it an exit? Like,
Mhm.
is it an IPO? Like, we have to know where
Mhm.
our exit position is. 7 is execution. Has the
Mhm.
founder and the team executed on their vision to date, and have they achieved their key milestones? Because how you do one
Mm.
thing is how you do everything. So I want to know what they've been
Mhm.
saying and what they've been promising, and have they actually been hitting their targets, or do they have a
Mhm.
history of saying a lot of stuff and not actually following through? And I want to know the
Right.
character of the person. And then
Right. Okay.
finally is risks. Number 8.
Yeah. Which one?
8 is is risks, key risks.
Ah. Mm. Okay. So it's interesting because number 7 ties in with number 100%.
Yeah,
Team and how they're doing things, right?
definitely,
Yeah.
definitely.
Yeah. Okay. Thank you so much for that. That was just like a crash course on how to evaluate private equity investments. Well, Todd, you're amazing. Thank you for over delivering on this episode. I love it. If anybody wants to reach out to Todd, everything Todd Polke is in the show notes. But Todd, maybe just tell us verbally what your website is.
Yeah, the best place for people to come to is that we run a free Facebook community called the Wealth Dojo. And it really is
Mhm.
a community full of other investors who are growing their wealth and doing it together. And, we spend enough
Great.
time with people who don't know, who aren't into wealth and creation. But like, when we get around that community where wealth building is just normal, it's a heck of a lot of fun. It's called the Wealth Dojo. So I'd love for
Mm.
people to become a part of it. It's absolutely free. And I just deliver a lot of really cool free education and trainings in there.
Oh, I'm guessing you do. Okay, well, thank you so much. And thank you, everybody, for listening to this amazing episode. Please share and subscribe, and we will see you on the next one. You're listening to the Business Wealth Impact Podcast, your source for empowering information and cutting edge ideas from the world's top minds. I'm your host, Jeanne Amlour, founder of seven-figure coaching company, Jeanne Amlour International. Join me on a journey to unleash your potential and create your highest success. Welcome to Business Wealth Impact.